Why are tech stocks surging or falling, even when the earnings seem disappointing? Stephanie Link says we're only in the second inning of this tech revolution. Find out what companies Link quietly singles out at the end.
Very sensitive to this excessive spend. And so for them to increase their capex to 116 to 118 billion for this year, from 114 to 116, that's a disappointment, number one. And number two, to be notably larger in 2026, that's not going to sit well with people. We just want to see operating leverage at this company, and we had been seeing that over the last couple of quarters. This is actually a departure from that, and I get it. They're building out data centers up the wazoo. They're hiring all kinds of talent for AI. They're doing it for the long term to continue to grow. But I think, near term, it's disappointing. Now, I would say ad impressions actually up 14%. That's a good number. That's a really good number, better than expected. And pricing of 10%, that shows that they're monetizing AI. And they're one of the very few that are spending all this money that is monetizing. We just don't want to see them spend this much.
But, Stephanie, the flip side of this, isn't it? I mean, you got NVIDIA touching that $5 trillion market cap, in part because folks like Meta, and there aren't that many, but folks like Meta are spending all that money on the infrastructure. So do you see anything here that's either derailing or bolstering the AI storyline that's been powering this market so much? These big names are continuing to spend. Meta perhaps seeing some results out of that. I don't know if the intelligent cloud mix out of Microsoft causes any concern, or if we have to wait for detail on the call to hear exactly what was going on with that.
Look, I think the spend is there, and it is gradually increasing, probably at a little lesser rate than that had been growing at. But they're still spending because the demand is still there. We're in the second innings of this. So it depends on which way you want to play it. You can play it with Mag 7 because they're delivering on the growth side, some monetization. They're delivering on the free cash flow, and they are investing for the future. Or you could go downstream in terms of technology. You've mentioned NVIDIA. Look at Broadcom. Look at Teradyne today, up 20%. We don't even talk about them. Then we go into Morgan's world on industrials and look at all of the grid manufacturers or improvements that we're going to see. Look at the data centers that we have to build. Look at the power that we need. So you can own things like Quanta Services and Eaton and Rockwell Automation and GE Vernova and Vertiv, which is one of my favorites. So you could do that, or you could even go to the utility companies. So you're seeing spend across the spectrum of between tech and between utilities, industrials, and that's why I don't think it is a bubble. But, certainly the ones that are spending more, and we don't want to see them spend more, that's why they're taking a hit. By the way, Microsoft, I think, is down only because Azure grew 39%, but the last couple of quarters, they have been beating expectations by 300 to 400 basis points, and they only beat by 200. So, I mean, really, that's silly. If the stock is down just because of that, you buy that stock.